Good evening. Epstein with your ETF stock market wrap-up. And boy, what a day. Today is Tuesday, the 4th of June, and the markets all started out in the toilet. I mean, they just went down. And then we got, as you know, the JOLTS numbers. And the JOLTS numbers came out and they said, hey, we're not adding as many job offerings out there as we had before. And the offering numbers for March were revised down. So we thought we had 8.4 million jobs, and then they revised it to 8.3 million. And this came in 8.04 million jobs being offered. And we're not seeing a lot of change in jobs. So all that held up pretty well and gave traders the idea that this is what the Fed wants. It's finally happening, where we're seeing the jobs pulled off as we're getting into the summer months. And maybe this is the beginning of the weakness. Now, they'll have another shot at jobs tomorrow, and that's because what we're going to get, and let me get there for you. You're going to get the ADP private sector jobs, and that's going to come out at 7:15 in the morning. So that'll be well before the market opens. Mortgage Bankers Association numbers come out. You get S&P Global Group. They're going to come out with their final May service sector PMI. The ISM is going to come out with their service sector indices for May. EIA petroleum stocks, and the Bank of Canada is going to talk to us about what they're going to do with their monetary policy. Traders are leaning slightly that they may go for the quarter-point cut. Then on Thursday, a much bigger event with the European Central Bank, in the sense that it's widely expected they'll go for their quarter point. So some of these markets have given up area. I was wrong, and I want to start out that way in copper. Okay, so I had said around the 48 level here that I wanted to buy COPX, and today I told traders if it closed under 45.70 on a weekly basis, but I said today you've got to come out. I don't want this to be turn a $2 risk trade into something bigger if it keeps going down. And I had traders come out. In the metals as a group, they've all been coming down. They had that phenomenal run-up where they were running to the moon, and the market has reversed that. Has the market really changed the inflation scenarios? Well, to a degree. We don't have as heated as an economy. We're seeing that with the jobs, the JOLTS number. I think you'd agree with that. But if the Fed starts cutting rates, isn't that the idea, to spur the economy back on? So it's a pause. Do I think you change the fundamentals in copper? No. Maybe in the near term a bit. You've got the market where you had a squeeze play. It came to an end. I thought that as it ended, the market would start with the bids, and my timing was wrong. I don't think I'm wrong on the fundamentals. When we take a look at some of the others, Amazon all over the board, but trying to hold basically under the 180 level, but trying to hold it. Looks like it's trying to find its footing and hasn't done so. Tesla down another $1.50. NVIDIA up another $14. I mean, you've got to be careful how much of your portfolio is in NVIDIA, because eventually you're going to get a correction there. Just keep it balanced. That's the thing you want to do. On the way up, I've had clients that have liquidated all the way up in stages to where they now have a base position of about 30% of the portfolio. I'm watching what Game is doing, because they and AMC are in because everybody's looking. I understand Minneapolis. Wait. Is it Maryland? I think it's Maryland regulators. I'm thinking in my head here, are looking now at, is this market manipulation? I don't know. People are going to find out. Certainly, what's going on here, nobody's saying buy, nobody's saying sell, but pictures tell 1,000 words too. And showing your portfolio and not mentioning anything, that's going to be the argument that people have with Mr. Gill. In any case, in PDBC, we have seen a breakdown in oil. We have seen a breakdown in the metals, period. You haven't broken really the stock indices or any of that. This is what's carried this market down. So we've had one of these punches where inflation came out, and the Fed's going to like that because some of the numbers will go into your inflation numbers, and you're going to see that things come down. You're not seeing gasoline prices shoot up as we're in the driving season now. I don't think you can be. If so, you got a gasoline station that's gouging you. You have a higher high, a lower low. You have literally come unglued. You've gone from 1448 to 1360. In money, it's not a lot. It's $1 a share. All right? So don't get excited that this represents a big amount of money per share of stock. But it's been a heck of a move to the downside, and it's getting ahead of itself. Now it's for the first time under the 100-day average, which normally is a zone the market found some support at before. Number two, it's under the Bollinger Band. Yeah, it could go lower, but it's also, as you're going to see in a minute here, very oversold, so be a little bit careful with it. When we come to Walmart, just continues to go to new all-time highs. So certain retailers, be it Costco, Walmart, they have the public's attention. People are value shopping. You know that. They know that. They're targeting it, and they're doing well because of it. And then the higher end in a lot of stuff is doing well. It depends which part you're at. It's the middle of the road that's getting hurt in that. As we look at Tesla, it just seems that every time you turn around, the Musk organization gets them, I call them the Musk organization, they get themselves into trouble because he's moving chips now. And the reason that he said he was moving chips out of Tesla to his AI companies, there was no room to store them. Get serious. Look at the size of those plants. Something isn't right here. You got to laugh. He's creative. Lower highs, lower lows. We'll see what that's going to do in the market. And here is Freeport. Now, this is where I think the support's going to come back in. Freeport's done this before. It goes to the Bollinger Band. It is a stock that likes to pay attention to them. Okay. I didn't say to buy this one, so I did a report on it, no question, but I never pulled the trigger because the chart pattern from the time I did it wasn't there. One of them did, COPX on the weekly, and it just didn't work out. Lower highs, lower lows. Okay. XLF, so now we're talking the financial. If the market gets back over 41.68 and can close there, I'd get a turnaround in this chart, bullish. I don't have, the chart's not offering a trend. You have a higher high and a lower low right now. In the industrial sector, this market rolled over a while back. And we've been coming ever since down. You remember the Chicago PMI was terrible, but New York had that big bump in it, and yet we're seeing others that didn't. But you've just been sinking back, and I'm wondering, you're not seeing all these jobs being offered. So it could just be that the employers are doing just fine for the orders they have, and they don't need more people. When we look at the consumer, the S&P 500 weighted consumer discretionary ETF, fighting a battle to stay bullish. It's fighting at the 100-day average and the 18. I mean, if you don't see that, I don't know what you're missing there. If you can pop and get through the highs of Monday, then you open the door for 48.84, but you are overbought. Be very careful. I don't see an ideal setup there. Just like I don't see anything in the home builders. Now you're back down to challenging just as you did before, the Bollinger Band and the 100-day average. You found support then, or you're going to find support now. The good news is we will hear soon that mortgages are going to slip a bit. You can't have the 10-year note at 4.35, 4.34 for this long and not see those mortgage numbers slip back down. So you're going to hear that. That doesn't mean you have to jump. There's nothing here that screams buy. And there's all kinds of signals that say maybe cover shorts temporarily, but nothing is saying buy in them. On the energy sector, you're down to the support of the 100-day average. And if you follow this through, it's been a supportive number in the past. We'll see if it can do it. The Saudis did an absolutely terrible job of selling their last plans that they came up with Sunday. They could have put contingencies in there and said, we will in October start releasing more gasoline. We're going to get rid of that voluntary moves, conditions warranted. quarantine. They didn't say that. And that just market says, oh, more oil coming onto the market or more whatever, and bingo, away you go. In the gold market, you don't have the inflation story right now, so that's why gold is backing off. The trend is down, the bias is down. You are oversold. I don't see anything there that looks good. Silver at this time of the year, and I mentioned it yesterday here, normally loses to gold, and it's doing it. You're in a full-fledged downtrend. Too much risk if you go short here to put a stop all the way up there, but it could work its way down to the lower band over the next couple of days, and copper's done that. So do I think there's a lot more on the downside in copper? I don't. Could it be in the futures another 15, 20 cents? It could. It doesn't have to. It could. That could drag this maybe towards the 42 level or something, but I think you're about where you have to be there. That doesn't mean I'm bullish. I'm not. Not here on that chart pattern. TLT, all of a sudden, look at how you came alive in this. Now remember, the higher you go on TLT and BND, the lower real rates are going. That's why I say the home builders, they might get a little bit of a bounce here sooner rather than later. In the dollar, stay away from the dollar and FXE right now. You're going to get the European Central Bank giving us their rate decision Thursday. Let the market tell us if that's bullish or bearish. There's a big decision that has to be made. Is it that the euro gets stronger because they're cutting rates to spur on the economy, or does the euro weaken because on a relative basis to the dollar, their currency's going down and we're still staying up at this point? The market will answer that question for you. So you put it together, you come up with game plans, and we're going to write about this in spades all through starting tomorrow. There'll be reports galore. They either can come to you via email and or if you get our charting software that we can give to you for free to try out as well, it'll be in there for you. Our handheld phone apps, it comes in there as well, and you get to have them as they come out. And we do cover all these markets plus spread strategies, option strategies, future strategies, special charts, special reports, ideas on longer term, shorter term, what the pros are doing in terms of hedging, what's going on where, and why is it going on. And at this time of the year, a lot of focus on the grain and the soft markets, as this is the growing season and you want to get that type of information right now. So if you'd like to try this, just go to our website, irapstein.com. Go to the part on the far left that says free offers, or move your cursor up here. It'll take you right there if you click on the icon. I'm Ira. Catch up with you in the morning.